Back with closing trades right here in ET now, and what a fabulous move you're seeing in the market right now. Start of the interim budget week, start of February, and there you are at that 21,700 plus mark already. Today, of course, it's all in all Reliance, which is hit a record high. It's hit that 19 trillion market cap level as well. Along with that, ONGC as well, which is also at a 9-year high intraday. It's trading above all key DMA levels as well. So that's really contributing as well. In fact, I think Reliance single-handedly is contributing to a 100-point move alone on the index. ONGC now scaling up higher, nearly by about 8%. HPCL has seen a decent move, 6.5% higher there as well. Adani Enterprises, and I think it's due to report its numbers on Feb 1st, the budget day itself, 6% of a tear coming in there. And then there is Coal India as well, which is higher by about 5%. Deepak Shenoy on the show with us. And Deepak, you must be all smiles. Finally, Reliance comes out of its hibernation.
It does. In fact, it did a little bit earlier as well because you had to factor in that Geo Financials was demerged. So while it's made its all-time high technically today, I think it had been done a little bit earlier because if you consider the 250 rupee extra that you would have got if you owned Geo Financial as well, I mean, because it was demerged, then the price is actually above 3,000. It's been a long time coming. But we're hoping, of course, more will happen and more will come in the future. It's one of the largest elements of our portfolio, so very biased in that respect.
You are lucky to have it in good amount, because good quantity, so that the moves actually make a difference to your portfolio. Sandeep, what are your thoughts on Deepak? What are your thoughts on AU Finance? That one got in this kind of a roaring market. Because of the asset quality fears, and there are concerns obviously after the results, the stock is up down 11.5% right now. Have you looked at the numbers? Because it talks a lot about the category they are operating in. It is perceived as a risky category, and there's some merit in that risk.
I haven't seen actual numbers.
Okay.
We don't track AU Finance, but the whole. I think if I'm not wrong here, they're more into the unsecured lending space / microfinance. So there is that level of fear that RBI has now created, that lending has reached a point where it cannot grow or should not grow, according to RBI at least, in any meaningful format. RBI, I think, has taken cognizance of the fact that it's very difficult to recover small ticket unsecured loans, and they're going after the category in general. I would feel here. For NBFCs, there's a double whammy because you get both a higher cost of capital when you borrow from banks, because banks have to now place a higher risk weight when they lend to NBFCs, and NBFCs also have to put a higher risk weight when they lend to personal unsecured loans. So for them, it's both a higher borrowing cost and a higher provisioning impact on their capital. So that impacts the stock a lot more. I haven't seen specific commentary by AU Finance and their numbers, so I'm sorry I can't put much more of a color on it. But I would say at this point, I'm not really interested in the financials, at least in the coming year so much, simply because I think credit growth, and other structural issues impact financials per se.
Financials not top of the recommendation list for you at this point of time. But Naresh, I wanted to bring you back into the conversation. What's the positional trade one should attempt on ITC ahead of its numbers?
So technically, it's been sideways for the last almost 6 to 8 months. Overall, 480 has been the problem zone, 440 has been the support zone. So out here, technically, there is no built up going into the results as such. But if somebody is looking at a trade, it has to be more on the long side. The stock has a lot of support around 440, 450 band. So stop loss below 440 and expect a bounce towards 480. So overall, more like a case wherein you're taking a risk going into the results. But technically, the case is more for the long rather than on the short side.
For long recommendation, if you must take a trade on ITC, the volume growth for cigarette business is expected to be around 2 to 3% itself only. But in terms of the other big movers in the last few minutes, Infibeam Avenues has actually been doing quite well for itself. There are a lot of these public sector entities like RITES, NBCC, SJVN, they're all perking up, and even names like NBCC, Ganesh Housing, they're all the stocks which are buzzing around in the trading session. However, on the losing side, apart from AU Small Finance Bank, there's also SBI Cards, which is coming under pressure. But Sony, if I had to ask you, from the power sector and power generators, that is, Tata Power, JSW Energy, SJVN of the world, is there a stock that comes to mind as a recommendation purely on charts, or everything is very overheated?
I think there's still a lot of momentum left. If we look at the charts of Tata Power, it has actually given a fresh breakout today above 365, 368 odd levels. So I think Tata Power is still a good buy on a positional basis. Any declines that you can see towards 375, 373 is a good range to re-enter and reinitiate the longs again and look for targets of 400, 410 plus. The stock has also seen good rollovers on the longer side. So I think this is definitely a good pick from the F&O sector. And from the cash spec, SJVN, we've seen it, continuously moving quite up. So I think for SJVN, technically, you see it's a good positional buy for the long side. So any dip that can be seen towards 120 will be a viable zone to enter and reinitiate the longs and for targets of 140. So it has seen multiple support, but the crucial support that it is holding right now is of 105. So I think 120, 115 should be the range one can re-enter and reinitiate the longs for SJVN.
I want to understand your portfolio strategy, start of the year to now. Anywhere where you've trimmed positions?
Was this for me, Aisha?
Yeah, Deepak, for you.
Hi. Yeah, we haven't done much. I think the only thing we've done reasonably in the recent past was to exit a little bit of escorts and maybe do a little bit of rebalancing. But the escorts being, there was a special situation that we were looking at, and that's kind of played out. So the stock has done well, but the special situation no longer applies. So we found other stocks that were more interesting to participate in, but or rather to increase our positions in. We're still very strong on specifically India-focused stocks, stocks that are actually developing and building for India, whether it is in semiconductors or in in the import substitution area, the infrastructure area, railways and defense continue to be our some of our key picks. We've got very little in financials, very little in IT. I think those are the two areas, and almost nothing in pharma in our fundamental driven strategies. And at this point, I think I'll still wait for results to finally come in. Things don't look as exciting as they were in the October news time when we saw the September quarter results come in. This time, the results are not as great in terms of an increase in revenues or in profits as last time. But I think there are pockets of excellence. We're seeing some extremely good results. The likes of a few players that are benefiting from operational leverage from the tiny caps, from like a Tips India at the smallest end to an L&T at the largest end. We're seeing a lot of improvement in operational performance and operating leverage kind of starting to play out. So I think adding more to our current positions rather than adding a new position at this point. But I'll wait for results. Everything can change in a few weeks.
Deepak, I want to a quick follow up on escorts. You say you trimmed position or you exited, because I wanted to understand once Kubota actually increases their dealer network around here, which I'm told is underway, or even tries to make escorts a center for global exports, all of that. It may take time, but that play could be big. Are you not wanting to stick around for that entire thing to play out, or you just trimmed exposure or exited?
We don't have a position right now, though, to be honest, we have to see some of these other things play out. See, the reason we got into escorts was a special situation where escorts, by virtue of, 30 or maybe nearly 40 years ago now, there was a hostile takeover of escorts attempted by an NRI person, I forget his name, but during that time, the escorts management had very little ownership of escorts. So eventually what they had done was use the company money, and at that time it was, there was nothing illegal about it at that time, but they used the company money in various ways to to effectively purchase shares of the company itself, which eventually sat in an ESOP trust. 25% of the company was owned effectively by this ESOP trust, which was only benefiting the company. There was no ESOPs given out at that time. That I was primarily to stave off any other hostile takeovers that could have come. And when Kubota took over, they said we're going to write down this 25% to zero. Effectively, if there were 100 shares in the company, there would only be 75 shares remaining for no cost. So effectively, your EPS would go up, and effectively shareholders would benefit. And the stock was at 1,600 odd at the time, and now it's 3,200 plus. And that special situation's played out. Whereas the future scope and prospects, I think we will wait for some of these things to actually take effect, because I think the stock is priced in a lot of this detail. And therefore, I don't see an incremental opportunity as big as I see in some of the other stocks. I could be wrong, been wrong a lot of times before, but I know that I'm going to have to take the ups and the downs by myself.
You have to take the ups and the downs, and of course the success rate of nobody in the market is anywhere close to 100%, right? But let's just focus and talk about some more budget cover that we have for you. We understand that the government might be looking at extending some of the benefits that they had given to the manufacturing units. What could be the shape and form of these extensions, and what would it mean for the sector? Let's take it across to Prakash to get more on the story. Hi, Prakash.
Yes, we are learning from our sources that the government is likely to provide relief to the manufacturing sector in the interim budget. We are given to understand that the government is likely to extend the deadline to avail benefit of a lower tax rate of 15% for the company just starting manufacturing unit in the country. Company just starting manufacturing unit may continue to get benefit of lower tax rate of 15% beyond March 2024. Sources are saying that the existing deadline, which is going to be expired on 31st March 2024, likely to be extended for a year till March 2025. A very significant development coming in. Sources are also saying that the industry has been requesting government to extend the existing deadline beyond March 2024 in order to provide boost to the manufacturing sector. This move is likely to help India to become next manufacturing destination amid a complex geopolitical situation. As you are aware that the government had announced such provision in the year 2019 for the companies incorporated on or after October 2019 to get a benefit of a lower tax rate of 15%. But there was a condition which is with regard to commence production on or before March 2023, which was extended for a year till March 2024. Now, we are learning from our sources that this deadline could be extended for a year till March 2025.
That needs to be watched out for. But meanwhile, Adani group of companies also coming out with the results, Adani Green in particular. And we have Amit Singh, CEO of Adani Green Energy, talk about the way forward and the performance this quarter.
In 2023, the global annual renewable capacity addition increased by almost 50%, the fastest growth rate over the past 2 decades. We expect this momentum to continue through the decade, aligned to the pledge taken by several countries at COP28 of tripling renewable energy by 2030. India is a rapidly growing economy, and renewables will play a crucial role in its growing energy demands. Our country has taken several policy steps to advance towards the 500 gigawatt non-fossil fuel capacity target to be achieved by 2030. The key ones include strengthening the supply chain, building the transmission network, creating storage solutions, and finally, mobilizing the capital resources to meet the significant capital outlay needed to convert this vision into a reality. At Adani Green, we remain focused on our 2030 target of 45 gigawatt, and with the latest capital raise initiatives, we are on a well-secured growth path towards this target. Let me take you through some of the important recent milestones. Post the recent shareholder approval, we have issued equity share warrants to the promoters for a total investment of rupees 9,350 crore, out of which 2,338 crore has been received and remaining amount is expected over the 18 months. We've completed JV with Total Energies for 1.05 gigawatt portfolio, thereby raising rupees 2,497 crore. We've upscaled our debt funding pool under the construction financing framework by USD $1.36 billion to USD $3 billion.
Point taken. But just taking a look at some of the pharma sector stocks as well, Cipla is one of the biggest drags on the index right now. So that's one stock to watch out for. In the Concor, actually, the company highlighted that they have a couple of launches which might get delayed. So that's the reason, despite a very strong show on the earnings, that stock is coming under pressure. While you have Sun Pharma, which is gaining ground purely on account of Taro's kind of performance. But Soni, if I had to ask you from the pharma pack, is there a stock that you would recommend as a buy?
Definitely, Anisha. I think from current levels, I can see Glenmark is holding a good buy level. So it has seen very good aggressive long rollovers from January to February series, more than 95%. And also it is hovering around its resistance zone of 900. So I think the moment it is able to cross 910 odd levels, you can see a fresh rally in Glenmark Pharma, and it can head towards levels of 940, 950. I think this is a good risk reward ratio it can place, because once it's above 910, you can keep a stop loss of 890 and then look for targets of 940, 960.
There's a mid-tier company into LNG storage, Ganesh Benzo, which shot up today after Anil Goyal has actually picked up preferential shares of almost 20 lakh. And this is in focus because just recently we had another Inox, a company which is again into gas storage. Can you check the charts of this one? Pull up the last 1 year chart if you can. And the stock is around here only. Is this a breakout or can't say for sure right now?
So this is a stock which I track closely and have an exposure. So I have a little positive bias here. But if you look at the technical chart structure, for the last 1 year, this might be almost the fifth attempt around that 175 to 180 mark. There have been two previous fundraisers, which was done by Malabar India Fund, and now we have Anil Kumar Goyal into the fundraise again. The stock has gone in this range of 140 to 180, roughly almost 5-6 times on both the ends. So if it sustains 180, that would be a major breakout. The recent high in November also was closer to 177. You go back to August, the high was around 180.85. And then March, April also, the stock had made a top around 180.85. So out here, the stock is setting up for that breakout eventually above the 180 mark. And if that happens, you have a much bigger target going forward. So structurally, good enough consolidation done sideways. Fundraising, I think, should be done. So it's an interesting case if one has a medium to, say, a longer term outlook here.
So that's the view coming in on Ganesh Benzo Plus. Well, let me quickly do one thing, take it across to Sharad as well. He's joining us to talk to us about what's the latest khabar on Concor. Sharad, take it away.
In focus is Container Corporation of India, and what we are hearing from the dealers is strong absorption is coming from the HNI segment. Now even the volumes, if you look at it, it's coming in at almost 3 times its 20-day average. And do remember the numbers recently were posted on 24th of January. The numbers were weak, there was some selling, but now the absorption is coming in the HNI segment. Now if you look at it, the Q3 numbers were impacted because of global trade disruptions in the Red Sea, and the street is factoring in that this might not be a structural impact going ahead for the company. But on the domestic front, if you look at it, the volumes have been strong. They grew almost 13% year-on-year basis, and secondly, even the margins have improved going ahead. Now the street is also factoring in the commissioning of the Western Dedicated Freight Corridor. Now that can be a re-rating trigger for the stock going ahead. The JNPT section is what I'm talking about. And importantly, Nuvama also at the brokerage house has stated that the earnings could double over the next 3 to 4 years, led by the DFC-led volume going ahead for the company. So strong absorption coming from the HNI segment after the sell-off which we had seen after the company had posted weak quarterly numbers.
Let's go across to our techies and also find out what kind of BTST trades are visible. Duresh, what are the trades on your radar?
So first would be a buy on Container Corporation. The stock has made multiple bottoms around this 820, 830 mark and reversing from it, expecting a move towards 875 odd levels. Stop loss at 855 now revised. Second would be a buy on Bank of Baroda, which is on verge of a flag breakout about 235. Stop loss at 232, target price of 240.
What are your trading ideas?
So the first
Sunny?
would be Jindal Steel and Power. So I think you can see a stop loss with 720 and target of 750, 760. It is closing above 20 EMA, backed with good rollovers on the longer side. So the first buy on Jindal Steel and Power. The second pick is on Bharat Forge. Bharat Forge is also witnessing good long built-up positions today. With a stop loss of 1220 and target of 1300 can be seen in the coming days for Bharat Forge.
Top recommendations. In fact, Sony as well as Naresh, we let you go on that note. Let me toss it across to Shrishti to get a sense of what the expectations are from Dr. Reddy's in the meantime. Shrishti?
A decent set expected from Dr. Reddy's this time around, though the North America sales is expected to see a jump of 6 to 9% on a sequential as well as on the YOY basis. But the price erosion could keep the numbers in check this time. While on the India business, because the company has already divested some of their plans as well as the weak acute business could impact the sales number. India sales is expected to be just up 2 to 7% this time around on a YOY basis. All of this could impact the numbers. Onto the profit figure, we are expecting a decline of a 10% on a sequential basis, though the margins expected to be flat around 29%. But there could be a surprise from the India business, then we will watch out for the margin performance as well. Onto the top line, we are expecting that to be flat at 7,000 crores and similar performance expected from the EBITDA front as well. So all in all, a decent set expected from Dr. Reddy's, but the margins will be key to watch.
Thanks so much, Shrishti, for that. But last 1 minute left for the trading session. So let's wrap up the day. And of course, it was a good trading session, ending close to the highest point of the trading day at around 21,750, almost a 2% surge, a 400-point rally on the Nifty. Sensex was up a solid 1,000 points in the Bank Nifty, also showing quite a bit of traction. And of course, even the mid-cap and the small-cap participated, with the advance decline ratio clearly being in favor of advances. The big star of the trading session, no prizes for guessing at all, it was Reliance Industries with that massive surge of over 7%, 19 lakh crore in terms of market capitalization at record high, and the single biggest session gain that we have seen since May of 2022. L&T wasn't too far behind in terms of the gains, because that stock is expected to come out with its numbers tomorrow. Ahead of that, there's a bit of a rally. HDFC Bank, Kotak Mahindra Bank were some of the other gainers. On the other hand, ITC ahead of its earnings was a bit soft, so almost a 2% cut on ITC. Infosys, Cipla, Bajaj Auto were some of the other losers. But in terms of the sectors, it was energy. Take a look at that solid rally on ONGC, a 9% surge. Coal India was higher by 7%. Tata Power, solid rally. BPCL, GAIL saw some result reactions as well. Even PSU banking names like IOB, Punjab Sind Bank, Indian Bank were all rallying in the trading session. In fact, all the sectors were in the green today, with a slight bit of underperformance from FMCG pack, given the kind of red color we have seen from ITC. But clearly a great start to the week, and it's an important week at that of elections, so we'll watch out how it pans out. But for now, the day belongs to the Bulls. Thanks so much for being with us.